FSN Radio. It's all about what's next. Go to financialsurvivalnetwork.com and sign up for your free weekly newsletter. You'll also get 3 free reports. The Financial Survival Network. It's all about what's next.
Well, 2 sectors you got to be looking at now, especially with Fed tightening, which is a reality, whether you want to believe it or not. We've got Ned Schmidt on, you know him well, publisher of the Agri-Food Value View and the Value View Gold Report. Ned, welcome back.
Hi, how you doing today?
All right, so gold looked like it was on its way to 1,400, breaking that number. It's pulled back a bit. It's just under 1,300. But, man, the food prices are just going to the moon. I can't believe how much bacon has gone up, how much my grocery bill has gone up, how much restaurant prices have gone up on the first 3 months of this year. It is spectacular, Ned, and it's exactly what you told us towards the end of last year, the beginning of this year was going to happen.
It's been right on schedule. We knew what was going to happen in meats. We knew that beef, pork, chicken were going to go higher in prices. Eggs, you better eat eggs now because this holiday season in the fall, you won't be able to afford eggs. They went to $1.34 at a wholesale yesterday, and you could see eggs at wholesale $1.75 this fall. But at the same time, the grains bottomed out last fall. In other words, price of corn hit a low in October. And since then, the Chinese have been importing everything they can import. One of the hottest sectors is dairy. Whole milk, well, it's actually dry powder milk, hit a record high last week on the exchanges. We are exporting every ounce of milk we can. Cheese exports in January were up 40% from a year ago. And it's going to China. Soybeans, we woke up this week to the reality that we're going to be down scraping the bins out again by August, September. And so the shortage of food is relative to demand, and demand is just incredibly strong around this world. I mean, we went into this year with the street saying the U.S. economy was going to be strong and the rest of the world was going to be weak. The demand numbers don't show that. But the Chinese consumption numbers are just extremely strong. And we can expect food prices to make new highs all year. I mean, my food index has made 4 weeks in a row of record highs. And when you look at the subparts, you don't see any relief. I mean, in pork, we've got, in the United States, we have PED, which is a diarrhea disease of piglets. The fatality rate's 100%. In Europe, they got African swine disease again. This problem of supply being inadequate and demand being strong is not going to change.
Yeah, and I read so far this year, the index food is up just in the grocery store 14%. And the way I'm seeing it, it looks like we could see one of those years where it's up 30-40%, where we see the Thanksgiving index up around 40%, whereas the Thanksgiving index has been flat for the past 2 years. And in a year where you see food prices skyrocket, almost invariably, you're going to see gold take off as well.
Yeah, I don't want to call it inflation. The food price shortage is causing abnormally high price increases. And at some point, the public starts being aware of this and looks for refuge from those price increases. And there is nothing the government can do about it. Easy money does not cause a cow to have a calf. Easy money does not make it rain in California. You know, there are just some things that the government can't do. And that's one of them, is change the fundamentals of food. And so if you're going to stay in the equity market, of course, as far as I'm concerned, we're in the early stages of a bear market that will last into early 2015. The agricultural sector, with prices rising, these companies are going to have better revenues this year than the street expects. And they're not rubbish companies. These companies actually have profits, real accounting profits after you charge them for all their costs. You don't have to go to EBITDA. And so there's companies like Agco or John Deere, Bunge, BG, Agrium, and Archer Daniels. These are real companies that pay dividends and have real profits, and they have the environment back working for them. So if you're going to force yourself into the equity market, that's a sector to look at. But if you've got some of these techno-junks and you've got exposure to the Nasdaq, it's time to take that money and look real hard at gold and silver. The gold market got horribly overbought when it was trying for 1,400. And so the sell-off we're getting now, we've been getting for the last few weeks, 2 weeks or 3 weeks, was to be expected. And it's now deeply oversold. We're as oversold as it's been any time this past year. And so if you look at the oversold condition, you've got to say that today was the day to start buying gold. And as we talked earlier, you're getting this oversold condition all across the currencies. In other words, wherever you look, euro gold, pound gold, Chinese yuan gold. And the important thing there on the fundamentals on gold is the gold market, the epicenter of the gold market, is moving from London to Asia. Korea announced a trading of cash gold on their exchange. Singapore has announced they're going to introduce cash gold trading. And so you can see a day in a few years when there won't be a London Bullion Marketing Association anymore, because they will all move to Asia. The demand for gold in Asia has not abated, and they like to buy cheap. So we'll see the Chinese back in the market. If the gold continues as it is, we'll see the Chinese back in the market again. So silver is if there's a frustrating thing in the market, it's silver. It has moved back to that $19 to $20 range. It's been in that. This is the third time it's been in that trading range, and I think it's deeply oversold. I mean, there's no doubt that silver's oversold. And of the two metals, silver is the cheaper one right now. But it's moved into this 19-20 range now for the third time, deeply oversold. I think you got to be adding silver to your portfolio too right now.
Yeah, and what do you think the event is going to be that makes these metals really take off, Ned? Something's going to happen. Yeah, something is, but I don't know what. I think we'd have to go to Colorado and get some cigarettes to conjure up any ideas. There's something out there we don't know. Clearly what it is, I don't know. And we are set up for one of those events. But we got to remember that, the metals should never be viewed as a trade. It's insurance that right now is cheap. And as we've talked before, with Putin on the run and nobody standing up to him, the wimp in the White House just cannot handle Putin. He's so outclassed. Playing poker with a KGB agent is never very bright. Because they win, they cheat. And so Putin is going to be in office for another 10 years.
And what he's doing in the Russian defense budget, it is just he's pouring the money into the military. So I think you've got to be adding the insurance. Because you and I can't tell somebody what day the hurricane is going to strike in Florida. But we know one will again someday. And so now is the time to be buying that insurance.
Yeah, so there's a kind of inevitability about it, isn't there?
Yeah, the thing we know is that things happen. We just don't know when that thing will be and what the thing will be. But we can expect it to happen. And when the insurance is cheap, buy insurance. I mean, to take a look at the Nasdaq Techno-Junk complex and not say that starting a bear market and that you ought to take some of that money out and buy some insurance, I don't understand how people can overlook that. I mean, it just makes perfect sense now. And you don't have much more time to start getting out of the Nasdaq Techno-Junk because people start being trapped. They say, oh, I'm down on this stock. I don't want to sell it at a loss. Well, the losses only get bigger because April 30th, we're going to get another cut in the monthly taper. And the Fed has told you that that's going to happen. And so the liquidity is drying up for the street. And that's not good for the stock market, especially this kind of market.
Yeah, I want to talk more about that up next on the Financial Survival Network. I'm Kerry Lutz. We're speaking with Ned Schmidt.
FSN Radio.
Do you have Medicare or health insurance through your employer? If so, listen up. The healthcare reform wasn't written to save the healthcare industry or even to lower healthcare costs. Shoot, it isn't even designed to insure the uninsured. It's just a temporary political byproduct. Like a flat rock you step on in a swiftly moving stream, Obamacare is just a means to an end. Want to learn more about Obama's ultimate objective? Then you'll want to review our latest research presentation found on oclies.com. In it, a health expert and industry insider explains what you think you know about caring for your health is about to drastically change in 2014. Plus, he details the simple steps you could take to save thousands of dollars per year in health costs. It's free for you to preview at oclies.com. Don't waste time. What you don't know about the healthcare reform could hurt you and your family.
The Financial Survival Network. It's all about what's next.
And we are back on the Financial Survival Network. We're speaking with Ned Schmidt of the Agri-Food Value View, the Agri-Food Value View, and the Value View Gold Report. So, Ned, the taper, what confuses me is the U.S. is running these huge budget deficits, and if we don't print, where is the money going to come from? That's what I don't understand here. Would you explain that to me, please?
Yeah, you have nailed the problem. It's kind of hard right now to get a handle on what the U.S. deficit is. Let's use $400 or $500 billion. It's somewhere between 3 and 5. So let's use $400 or $500 billion. That means if the Fed's monetization drops below $40 billion a month, well, let me back up. If it's above $40 billion a month, which it was, the Fed is financing the deficit plus giving the banks excess reserves. In that environment, what they do is they lend it out to Wall Street, and that's what pumps up stocks. As they bring that monthly taper down below $40 billion a month, they're not fully monetizing the U.S. government deficit. And that means to finance the deficit, the Treasury has to start sucking money out of the banking system, out of Wall Street. And so the money, maybe not at the end of April, but at the next taper, we're going to start seeing a net withdrawal of money to finance the U.S. government deficit from the banking system. Well, that means the money that had been flowing into stocks is going to start flowing to the U.S. government. And so as long as their taper, whenever their taper falls below $40 billion a month, and we're at 55 now, we'll be at 45 on April 30th. That means when the next cut, money has to flow out of the banks in the street to finance the federal government. That usually starts to cause a bear market. And we've already had all three of the major indices pop out. And what happens to people is they get caught by the cost of an investment. I paid $42 for that. I'm not going to sell it at $38. I want my money back. Well, I assure you, neither the stock market nor God knows what you paid for a stock. If they did, they didn't care. They don't care.
Yeah, that's for sure.
So you're going to, people will say, I don't want to sell it at 38. It's a $4 a share loss. Well, selling at 38 is better than the 31 you're going to sell it for when you finally get tired of it. And so don't let yourself be trapped in this market. People would be best served in this market to not look at the cost basis if they paid for anything.
Yeah.
Will I buy this stock today at this price? That's your only question.
Yeah, they say your first loss is your best loss, right, Ned?
Oh, it always is. And, as well as I know that rule, I have to prove it to myself every 5 or 6 years. It's really bad. I really burn myself, and it's a lesson that if you ever really accept it, it'll save yourself some money. And saving yourself some money is as good as making money.
Yeah. Well, it's a hard lesson to learn because, emotions run deep. And unless you're a professional trader, it's tough for the average person because when you have money at stake, it's hard to just separate your emotions from the trade. And I've fallen prey to it myself, I have to admit, which is why I always...
the hardest thing in the world is to admit that I made a mistake.
Yeah. Okay?
You're probably going to make more than one in your life.
That's for sure. In all likelihood.
in all likelihood, it's going to be a long list. And what kills me is, like I said, I have to relearn that rule myself every couple of years. And every time I do it, I say, you knew what was going to happen. You knew what the correct response was. And
you still didn't do it.
Yeah, the most dangerous thing in the world is, I think it will get better, or I think this will happen. That's wishful thinking.
Hey, I knew one just recently. I just knew it and I blew it because I knew that when Comcast said they were going to take over Time Warner, that the world was too big for two satellite TV companies. Of course, I didn't do anything about it. Just yesterday, we heard that there's a chance that the two satellite TV companies are going to merge, but it didn't do me any good. Perfect example, Yeah. So hey,
it is.
I didn't lose anything on it, so I just didn't make what I could have made if I followed my own brilliant insights. So there you have it.
And then these mistakes we're just talking about is not just you and I. I mean, you look at what is considered the brains on the street. I mean, the guy that shot Herbalife, he was really wrong. How about the guy that bought Sears? J.C. Penney.
Lampert, yeah.
Yeah.
Yep.
Good people do make mistakes, and just we have to acknowledge them.
And learn from them, hopefully, right?
And that's right. Oh, I know. One last thing. On Bitcoins, there was an announcement probably yesterday. Oh, no, it wasn't yesterday. It's when people started to become aware of it, is the People's Bank of China will force the closing of almost 100% of all Bitcoin accounts in China by April 15th.
I think that was a rumor. Thought it was a rumor.
No, and the place to look for it, if anybody wants to read the article, this is the most incredible source on China. It's CAIXIN, and they have an English language version. This comes out of China. It is the best source of news on China, and they have an article on it. And the only way, PBOC rule means Bitcoin websites in China must close, experts say.
Yeah, I'm seeing that.
And if you read the article, yeah, they do. What they've said is you can have a Bitcoin account if you buy the Bitcoins with cash.
Mm-hmm. And
then this week, the IRS issued the tax rule on Bitcoins, and you're going to have to report your Bitcoin transactions as ordinary income. And so you thought, if you're a U.S. taxpayer and thought you were going to get away with not paying taxes on it, the IRS says we want our money.
Yeah, well, you knew that was going to happen. But I thought they were property, so you'd have capital gains or something on them.
Well, no, they were saying it was currency.
Yeah.
And there are some rules on exchanges of currency, which I don't do much of, so I don't know what they are.
Mm-hmm.
But they say, no, it's property, like a stock, and you have to report it.
Right.
And so, and the reason I mention that is, all these problems with Bitcoin, you don't have with gold or silver in your safety deposit box.
Yep.
No one has ever hacked my safety deposit box.
That's right.
It never happened.
Yep.
Never happened.
And Bitcoin.
And I'm pretty confident it won't.
Bitcoin right now is down to $519.45 per Bitcoin. So it's taken quite a hit. It's down almost $200 or $150 per Bitcoin in the past day. So, Ned, we got to conclude, but people want to subscribe to your sites, to your newsletters, find out more about you. Where do they go?
Well, you can find my gold opinions at valueviewgoldreport.com. My agricultural site is Agri, A-G-R-I, food, valueview.com.
All right.
And as always, be glad to hear from your listeners.
Yep. Don't hesitate to contact Ned. The links are in the show notes to this interview that you're listening to on financialsurvivalnetwork.com. If you haven't subscribed to the newsletter, do it now. We just had unbelievable newsletter, gotten tons of feedback on Operation Dirty Money, which is really, I believe, the Treasury's attempt to get you into electronic currency, preferably digital dollars, whether it's credit cards, debit cards, whatever. They're just not replacing the currency anymore, Ned. They want you to give up your dollars because everything else is traceable and taxable. On that note, Ned, that's what it's about.
On that note, okay. Talk to you next time.
All right. You be well.
All right. Take care.
FSN Radio. It's all about what's next. Go to financialsurvivalnetwork.com and sign up for your free weekly newsletter. You'll also get 3 free reports. The Financial Survival Network. It's all about what's next.